How we doing? Welcome back to the YouTube channel. Now today I'm going to be breaking down how I aim to gain $1 million in funding this year. I'm going to break down where I'm currently at, my risk approach to these challenges, and basically my whole transparent approach on how I aim to achieve this and how to actually keep these accounts, because it's all well and good passing funded evaluations, but the hard part is always keeping them and getting payouts. So stay tuned to the end of this video to find out my approach. I thought I'd just show a bit of proof of concept and to what I'm trying to build. This is currently my live track record. I'm up about 24% this year. Again, I'm not overly gassed about these returns. Very somewhat mediocre. My equity curve definitely needs some work. My drawdown periods have been pretty heavy. And you know, that's something that I'm definitely working on at the minute and refining my approach and becoming a little bit better, both mentally but technically as well. So this is the live track record. It's been active for about 1 full year now. So that's very nice to see. Again, not too many people are willing to show this. So I hope you will appreciate this and yeah, stay tuned. Right, so here we go. Here's the big number, right? This is the $1 million in funding. Now this is probably the goal that I think everyone in this space nowadays wants to reach. We all want to become 7-figure funded because what that allows you to do is have full diversification in your trading. It allows you to consistently reach payouts every month, and it really does kind of bridge the gap between part-time trader and full-time trading. This is kind of I think the big turning point in a lot of people's trading. So let's just go ahead, break this down. Now, first and foremost, you need to understand kind of where I'm at. So I currently have about $330,000 in funded capital. Now that's with FTMO, Alpha Capital, and Fivers. So I am short by about 700K, give or take. Let's just say 700K. So that's fine. We need to gain 700K in funding by year end, which is more than achievable with the approach that I'm going to show you today. So prop firms is the first approach for me. Now, I am currently undertaking DarwinexZero, so I am trying to become investable in that respect as well. But currently, prop firms are the fastest way to gain significant funding and to actually increase our income, which is really where we're all trying to get at, right? We're trying to gain that income. So what firms am I going to be choosing? Now, there is a few different ones. I'm still not funded fully with FTMO. So I still have 200K to gain with FTMO. I'm currently funded 200K with FTMO. Alpha Capital, I am only funded about 50K. So I am still about 250K short from their max allocation. And then the other one, I'm not 100% sure on what firm I'm going to be choosing. Potentially funding Pips, which I believe you can get up to 300K in funding. Now that obviously takes me over the threshold of 700K. So the focus for me is not just to be chopping and changing between different firms, what firm looks good, what doesn't. I'm really trying to focus on actually, you know, mastering each firm and becoming max allocated with each firm. Now, I am going to be using Prop Firm Match to find out all the best deals, find out all the rules for these firms. Obviously, funding Pips is one of the top ones. Fivers, again, is currently I'm funded with, is one of the top ones as well. And Alpha Capital is up there as well. So these are kind of the firms that I'm going to be focusing on. These top firms, good track records, good payout stability, good overall business model. And yeah, because ultimately we want reliability. We want to be able to secure these payouts in a way that's sustainable and that kind of works for everyone. So these are probably going to be the firms that I'm going to be focusing on. Now, secondly is the risk approach, because challenges warrant some little bit of extra risk. Now, myself, my trading approach is lately has been somewhat slower. So I've been averaging about 1.5 trades per week. Now, the calculation that I'm using to gain the risk that I want on each account is our max drawdown divided by 2. So 10% divided by 2, which is 5, and then divided by the number of trades per week. Now, if I divide 5 by 1.5, it gives us about 3.3, which, to be honest, I'm not going to risk 3.3% on a challenge. Just because psychologically, I'm not super comfortable with that. I think it's a little bit above my threshold. So for me personally, I'm risking 2.5% on an account. I am risking 2.5% on phase 1 and phase 2, which, you know, is the sweet spot for me. I'm more than happy to do that. And so once I'm able to get those challenges over the line, ultimately, I'm going to fail some challenges, right? I'm not going to pass 100% of my challenges. I think last month I lost 200K in evaluations, which is fine. Again, it's going to happen. But in previous videos, I've talked about the payout, the purchasing of accounts and how you stagger that purchase really has an impact on, you know, the past probability of those accounts. So I'm buying challenges at the start of every month. I'm buying 200K of challenges every single month, and that way I'm able to spread out my equity curve across a larger kind of time horizon, giving me the best probability and the best chance of actually passing these accounts. Now, once these accounts are funded, the hardest part about funded accounts is keeping the accounts, because it's all well and good full port and an evaluation and passing it, but the hard part is keeping the account and gaining consistent payouts from those accounts. So once I gain this 1 million in funded capital, the goal is to split the allocation up into different funds, or what I call funds. So I want 5 different funds of 200K baskets. So fund 1, fund 2, fund 3, fund 4, fund 5. Now, each fund is going to trade slightly differently. So each fund will take a trade, whether it's a win or a loss, you add in the next trade. Now, if it's a win, that account will be secured for a payout, and then it will be put to the side and the next one will be traded. Again, if it goes into drawdown, that's fine, not a problem. I'll add in the next account. If it goes into drawdown, again, that's fine. Add in the next account. If that one hits a win, ready for a payout, close it. Add the next one in. So we have this kind of revolving door, this ability to actually consistently churn payouts from these accounts and gain monthly income from these accounts. Because ultimately, you know, if I were to trade the 1 million as a whole, I am very susceptible. I have no diversification. So I'm very susceptible to not gaining payouts in a month, because you can go through a drawdown of, you know, 1-2 months and gain no payouts. And that's not the goal here. The goal is to be able to gain consistent monthly payouts from these prop firms. Now, for that risk approach, I'm going to be risking 0.75 to 1% risk per trade. Now, if I go into drawdown, I reduce my risk to 0.75%. If I'm above 3% in drawdown, so if I'm negative 3% in drawdown, I'm risking 1% per trade. No real dramas with that one. And that is basically the whole prop firm approach. You know, it's not very complicated. It doesn't need to be hugely dramatic or anything. It just needs to be consistent. Now, ultimately, this only really applies if you have a statistical edge, if you have a strategy, a model that actually has proof of concept that you've been able to, number one, achieve funding, but actually achieve payouts from. Because if you haven't gained proof of concept yet, it's going to be very difficult to trade these evaluations with confidence, to trade your model with confidence. So before you even undertake something like this, you have to have proof of concept. You need, you know, a year of data, at least 3 to 6 months of live data where you've been able to pass a challenge, where you've been able to gain a payout. That way, it gives you the confidence that you know what you're doing. You can actually trade, you can pass these evaluations, and you can gain a payout. So before you even undertake something like this, proof of concept, that you always need proof of concept. So that's the first approach, is obviously prop firms. Now, the next approach is going to be my DarwinexZero account. Now, this is still going, and this is kind of on the longer term perspective of things, because we know it's not prop firm, it's not it's not a gain funding exceptionally quickly type deal. It's actually to build a live verifiable track record, which, you know, I'm trying to do the two here. Now, the approach for this that I'm currently taking is I'm risking 0.5% risk per trade, and I'm focusing on consistency and execution quality. I'm not just flinging random trades. I'm not closing early, none of this stuff. I'm being really consistent. I'm trying to keep my execution quality high. I'm trying to take the best trades that I can in order for me to, you know, build that consistent and fairly smooth equity curve, which does really well for these investable platforms. Now, I'm risking 0.5% because the risk engine is going to do the work. So as long as I keep my risk managed well, as long as I be consistent with my execution, be consistent with my risk management and all this stuff, the risk engine is going to bump up my performance. Hopefully, we'll obviously see how that pans out, but I'm still probably a month or two away from actually gaining, I guess, the Darwin and getting through this calibration phase because my frequency is fairly low. So it's definitely a longer term approach here, but that's fine. I'm totally okay with that because I have both engines running. I have prop firms and I have this DarwinexZero account that I'm going to be trading. So that's the risk approach. That is the road to $1 million in funding by the end of the year. Completely achievable. Obviously, we'll need to see how these markets trade the next few months. You know, there's still heavy geopolitical sides of things, which again is for a different type of video, but that is the goal for this year. So that's it. That's the road to $1 million in funding in 2026. I hope you all are going to join me for this journey. We're trying to gain as much funding as possible and gain as many payouts as we can. So follow along for more, hit that bell notification so you never miss a video, and I'll see you all soon.